Welcome everybody, good morning, good afternoon, good evening, depending where in the world you are. Welcome to this webcast, The Landscape of Internal Controls, the elephant in the room. This session and the survey it's based on was stimulated by some discussions with large organizations in Europe and the US about the state of internal controls and the way they're applied and implemented. So we're going to share some insights from that. This webcast is going to be 40 minutes in duration. I do appreciate we advertise it as 30 minutes, but we found that we needed to have the 40 minutes, so I hope that's not a big problem for you. If you have to stop after 30 minutes, you will be able to get access to the recording for the whole thing and the balance. So thank you for that. Introducing ourselves, I'm Dan French. I'm founder and CEO of Consider Solutions. So welcome from me. I'm joined here by Dennis Rusch, who's IT Risk and Controls Leader at a global consumer goods leader back here in Chicago.
Good morning and welcome.
So here we are in Chicago. The winter's over, but the weather's still not much better. We had tornadoes just a little bit south of us yesterday, so we're waiting for some decent weather. A few words about Consider Solutions. Many of you know about us. You've been on our webcasts before, and some of you are our clients. We focus on helping organizations achieve a state we call world-class finance. It's all about optimizing business results, reducing the cost of finance through streamlining, optimizing cash flow, and managing risk, which is obviously what today's discussion is part of. We operate in financial control and compliance, risk assurance, and helping streamline finance processes. And we provide a number of areas of support to our clients. We've got clients in the US, Europe, South America, and you recognize some of those logos there. So as I introduce the agenda, just want to remind you that we have got questions available here in this webcast. So in the panel in front of you, you can ask questions as you go through, so please do. We encourage that. At the end, we'll endeavor to answer as many of those as we can. Those we can't answer today, we'll do by email. If you've got any technical trouble with the webcast service, again, put a question in there and someone will help you. So in terms of today's discussion, I've introduced myself and Dennis. Our objectives really today are to share with you some of the insights we've had around this discussion around the landscape of internal controls, share the results of the survey, see some of the insights we have from that, and share a case study that Dennis is going to talk to us about. So we're going to talk a little bit about risk control and automation, share the survey results, Dennis's experiences, then some hits and some mythology, and some suggestions for you. So just to start, let's think about financial risk, financial control. Obviously, the past, we've got an interesting 10 to 15 years since the tightening of financial control regulation after the unpleasantness of Enron and others. And obviously, Sarbanes-Oxley was a poster child for that. But a lot of focus on key controls around internal control for financial reporting, other operational controls, and indeed other compliance controls for other legislative domains and for anti-corruption, anti-bribery, and many other things. There is, of course, or hopefully we're through it, but there was a big hangover from Sarbanes-Oxley. I think often many organizations were slightly enthusiastic in implementing their controls in the early SOX years, probably encouraged by third parties. And there was a lot of focus then on how do we reduce the cost of this by rationalizing our controls, reducing the number, focusing only on the important ones. Also looking at how to automate processes and automate controls, again, help to reduce the cost of compliance. And then, of course, there was a big discussion around preventive versus detective controls and what was the most appropriate thing, and there was much of that. And, of course, very timely, last year, COSO, which is the basis, the COSO framework is the basis of most financial control regulation, including Sarbanes-Oxley and other control regulations around the world. That COSO framework, which is some 20 years old, went through a big revision last year, and so something called COSO 2013 came through, and we're all being encouraged to implement that by the end of this year. So this is kind of a timely point, if you like, for discussing internal controls, because it's going to be on the agenda anyway. So I like this chart as an introductory image. This is a COBIT framework, a diagram from COBIT. So this basically illustrates internal controls as they relate to financial applications, and significant accounts in the financial statements. So at the top you see the fundamental things we're trying to assure. Make sure financial reporting is in good shape, balance sheet, income statement, cash flow, etc. Business processes and classes of transactions that flow from that, the financial applications are implemented in, and the IT general controls and application controls around them. So I always find that a useful image just to put the hierarchy together. Now there's three key types of control within any one of these frameworks, and it's worth thinking about this because this was part of what we were getting to with the survey. Obviously the entity level controls, which are those controls which govern the operation of the overall business or key entities within it, so directives and policies. The IT general controls, which are related to the proper implementation and control of applications that support the key controls, the key financial objectives. And the process level controls, which apply to the individual process to make sure they have integrity, that we can rely on the results. So that's important. But when we were discussing this and preparing for the survey, we also started to think about how these controls are implemented. And perhaps it's a bit upside down, because we try to, normally we try to think about the why, the what, and the how of problems in that sequence. But the how things are implemented became quite important in this discussion. So we had a look specifically at the way controls are implemented, whether they're manual, which are basically performed by an individual without making use of any automated systems, and there's still a lot of those. Automated controls, which are completely performed by an automated system without any need for human interference. And then the IT-dependent, hybrid or semi-automated control, where there's a manual element but is dependent on some automated data or information required. So that's kind of interesting. We need to think about those definitions as we get to the survey. So that's that. And then if you think about received wisdom over the past 10 years, this kind of quasi-Venn diagram kind of shows that. So obviously we've got manual controls, IT-dependent controls, and automated controls within our ICFR landscape. And there was a big focus, or has been a big focus, on preventive versus detective controls. So if you look at the green elements, preventive and automated controls have definitely been the focus of attention in the past 10 years. How do we automate this? And, you know, so that's good to know, and it makes a lot of sense. Preventive controls should streamline processes. Automation eliminates human input. So that's makes a lot of sense. But it's one of the things we started to challenge when getting the feedback from the survey. And then let's think about maturity of internal controls. There's a lot of good maturity models out there. Most of them are based, as this one is, on the capability maturity model. And you know, it makes a lot of sense. And it's, you know, you can see that the higher levels are definitely aspirational. You want to get there. But as you start to look at this, it becomes clear that the higher levels of achievement are all based on the assumption that you're dealing with automated controls. So, for example, integrated controls with real-time monitoring clearly implies automation. So there's some assumptions built into our aspirations and maturity models here. So again, these are the things we're questioning. Can we support them or do we challenge them? So let's talk a little bit about the survey. Hopefully you all have taken the survey. There were 5 content questions in this survey, and I'm going to give you a snapshot of the results. And the questions were all about percentages, ratios, not a specific number, which will change from company to company. But we wanted to understand what percentage of the total control framework were the ICFR controls, the internal controls of financial reporting, and within internal controls of financial reporting, what percentage were entity level, IT general controls, or process level controls, as we shared earlier. And for each of those, what percentage of those controls in either entity, ITGC, or process level, what percentage are automated, manual, or IT dependent? This was a very interesting discussion, and some people had trouble answering the question, which is not perhaps a surprise, but it's kind of interesting view of the world. So let's look at some of these snapshot results. We are sharing results in detail for those who participated. The first thing is within ICFR controls. It's pretty clear that the majority of people felt that entity level controls in their business accounted for less than a quarter of the total ICFRs. Interestingly enough, a very large percentage also felt that IT general controls were a small percentage as well. And the general view was the largest percentage by far were those process level controls. So that's an interesting status, perhaps not a surprise if you thought about it in detail. The second one was about entity level controls and automation. We wanted to understand the appropriateness and the implementation of automation by each of these levels. So what we found is the majority of respondents felt that less than a quarter of entity level controls are automated, and indeed of that, 27% said 0 are automated. Now, perhaps that's not a surprise. It may actually be a surprise there weren't more than 27% saying 0 of entity level controls are automated. Many people observe that they feel that entity level controls are not automatable. They're all about attestation for management. IT general controls. Again, this was an interesting response. Some people were surprised by this. A very significant percentage of respondents said that less than a quarter of the IT general controls are automated. Yeah, that sounds like a surprise because when we talk about IT controls, we tend to think of IT is all about automation, so therefore the controls should be automated. But of course, many of those controls are policy controls over the IT environment and the landscape. So it's another interesting perspective. And then in the process level controls, the majority of respondents told us that less than a quarter of their process level controls are automated as well. Now, since process level controls are by far the biggest segment, that's quite interesting because it's a quarter of the biggest segment. So then you start to see the total level of automation of key things is lower than one might have expected. So let's have a think about these conclusions. And there was a broad distribution of responses, which wasn't a surprise. Part of that is because although we all use a common framework, there were many comments in the survey that people's definitions of things were slightly different. So we use a common framework, COSO, but the taxonomy of controls is still imprecise. And if it's imprecise, it's difficult to compare. So we're stating these definitions to try and give that basis of comparison. The other piece that's interesting is there's people who responded who had large-scale ERP implementations, consistent processes worldwide, automated controls, and people who haven't done that. But the range of automated control is not as high as you might consider between the two. So the ratios were about, the lowest end of automated control is about 7%, the maximum is about 25%. Now, you kind of might expect that upper number to be significantly higher on the big, across the big spectrum of controls. The majority of IT general controls are not automated, and that was definitely a counterintuitive thing, and then the more we thought about it and discussed it, we realized that's perhaps not so surprising. But the majority of controls are not benefiting from automation in terms of implementation or testing. That's very clear. By way of caveat, the survey didn't address the effort or future plans to improve the level of automation. So what effort are people putting into controls today? What are the future plans for improving the levels? So you might expect that over the next year, some of these numbers improve, which is all good. But we started to discuss with survey respondents about what's the reasons for the low penetration of automated controls. And a number of options, a number of ideas suggested. Perhaps some companies have got incomplete ERP implementations, so over time it'll get better. Perhaps organizations have got controls automation plans underway, so when that gets completed, their results will get better. Other people suggested that a diverse landscape of financial systems with lots of interfaces makes life very complex and actually might make it too costly to implement automated controls. And then that relates to number 4, was is there a sufficient benefit of automation? The 5th one came up many times, which is a lot of controls need management oversight and attestation. We can't automate all of these things. So entity level controls and policies was a good example. We need to know that management are asserting that yes, we're doing these things. Approvals, authorizations and verifications by management, reconciliations, reviews of performance, security of assets, and the overall control over the information system landscape. So those are kind of interesting views. And dig a little bit deeper in management oversight and attestation, the kind of 3 goals of attestation that we've seen. One is to ensure you'll have assertions from management about key account balances, they exist, complete, they're properly allocated. assertions about classes of transactions and events. Do they happen? Are they complete? Are they accurate? Are they classified appropriately? And the presentation and disclosure of information. So those are the three kind of goals of attestation, where you need management to say, yes, this has happened. Whatever the system says, management can say, yes, I can assert this is the case. But there are also three types of attestation we found talking to survey respondents. And when you want management oversight and attestation, three areas. A simple attestation. So perhaps attestation that a control or a policy is in place and is effective, or that control has been executed. And that's a simple yes or no. Yes, you go to all of the heads of your operating units, and they say yes, we're implementing that control. But of course, we've all had experiences with yes/no questions to things you should have done. The answer to this is what you should have done, have you done it, is normally yes, certainly in business. So a lot of people are moving to this concept of attestation with evidence. I want to know that the control or policy is in place and effective, but I want documentary evidence from each operating entity that that is the case, not just a simple yes, you've done it, don't bother us. And the third level, which is where a lot of effort comes in, is the attestation where there's variable data involved, so the validity of data, which comes from systems, and the sign-off or rejection of it, such as ensuring that manual journal entries are approved before posting into the GL, and we'll see some of that later. So it's interesting, these three types of attestation we've seen in terms of general models. So that's kind of an introduction. It's the results of the survey. It's some conclusions and insights from that. But I'd now like to introduce Dennis Rusch to give us some insight in his experiences in the consumer goods sector. Dennis, over to you.
Good morning again. Welcome. Thank you for the opportunity to share with you some case study from our customer. The examples in the case study that I'm going to present to you are real-life examples of our customer where we onboarded manual controls to an automated workflow utility, which in effect streamlined, simplified, and optimized the execution of the control itself, and at the same time automated the attestation and provided evidence for it. The two examples that I want to share with you today are ICFR controls. One of them is a process control, and the other one is a IT general control. The process control is a monthly manager review of GL postings at month end prior to the final posting. The other control is in support of our compliance requirements. This is a global user security access review, which is a periodic review that satisfies our compliance requirements. Now, I wanted to point out a couple things about these examples. First is that in both cases, our source system, these are IT-dependent controls, and in both instances, the source data is SAP. But I wanted to point out that that does not necessarily have to be the case. The automated workflow utility is platform and application independent. So these controls, the source data could have come from PeopleSoft, Oracle, or just a host of variety of legacy applications as well. I also wanted to point out that although we're using the SAP data, it could have been anything. Before I get into the details of it, I wanted to put up this graphic, which is a very good depiction of the process that's followed to execute a manual control, IT-dependent control. And in that case, the first step in the process is to gather your data. It's usually extracted from your source system and dumped into Excel, for instance. Sometimes it goes into CSV files. Once that's been completed, there's a preparation of the data. Whatever your data that you're reviewing has to be mapped to a reviewer, and depending on what you're reviewing, there may be some other manipulation of the data that takes place. Once that's completed, we roll into the execution phase of the control. And this is where the life of a review coordinator gets interesting, because in a manual process, it's usually all based on emails, The coordinators has to follow up with reviewers. It's usually done in a worksheet, which gets messy, and it's inefficient to say the least. As we move into the final phase of the control execution, all this information needs to be consolidated. The coordinator has to track down the reviewers to make sure that everybody's reported back. In some cases, there's a lot of evidence that's generated. All that information has to be cataloged or logged and then placed somewhere, for instance, in a repository or in most cases in a shared folder somewhere or on a team site. So that's the basic process. It's cumbersome, requires a lot of effort, and inefficient to say the least. The first example that I want to share is a park and post review. And what a park and post review is, it's a process control where at month end, GL entries that have been generated throughout the month are placed into a holding bin, if you will, which they are considered parked. There are thousands of these entries, and at the month end, it's mandatory that there's a finance management review of these postings before they flow into the general ledger. The issues that we deal with from a manual sense is that we're dealing with large volumes of data. The data itself is uncomfortable at best to work with. It's cumbersome for the reviewers to find the data that they need to review and to actually have enough information to take action on the items themselves. Because it's manual, it requires a significant amount of time and effort to complete, both on behalf of the reviewer and the review coordinator. And then finally, in a manual sense, managing the execution of this control from beginning to end is very inefficient and time-consuming. So to give you an idea, this is what a reviewer receives at month end. Once the data has been gathered and put together, they receive an email with a workbook from an Excel. They are to go into the posting summary worksheet and find the postings that relate to them, that are owned by them, that their employees had posted throughout the month. In many cases, they'll be able to tell from the summary data exactly what the posting is. Perhaps it's a recurring entry, and they can take action. They can approve it or reject it. In other cases, they can't. They need more information about this posting. So they have to go to another worksheet, which contains thousands of entries, identify the detail that makes up the summary posting, and then they can make a decision. So as you can see, it's a time-consuming, clumsy at best process for executing a review. So what did onboarding buy us in this case? Well, just by the nature of the fact that it's automatic, we've introduced automation, we're able to process large volumes of data more easily. We also eliminated the worksheet as a method for conducting the review. The automated workflow utility actually bundles the summary and detail information and maps it to the users, or the reviewers, I'm sorry. The reviewer then is automatically notified that reviews are pending and is provided a link where when he clicks on the link, it takes him to a review homepage of his own, where all the information is contained. It's no longer separated or fragmented, and all the information that he needs to make a decision can be obtained from that one location. Again, due to the automation, it greatly reduced the effort on behalf of the coordinator, the review coordinator, and in this case as well as the reviewer. We also provided, the tool also provided the tools necessary to manage this, the execution of the control from beginning to end. It includes triggers for multiple automatic notifications. It's got multiple levels of status reporting, so the coordinator can check at any given point to see where in the process they're at, as well as things like automatically reassigning reviews to other people, for instance. This is what it looked like again when it was manual, and this is what it looks like now that it's automated. When a reviewer is notified via email, he's provided a link. When he clicks on the link, all his information is presented to him in one place. Again, from here, if he has enough information, he can take action on a review, on a posting right here. If he needs more information, all he has to do is click on the summary posting, and it will take him to all the detail that makes up that posting. If he still doesn't have enough information, he can drill on the detail items, and he's presented with yet more information. So now he has all the information that's available for this posting, and he can make his decision. If he closes out of this detail, he can go back and he can action this summary posting. By action, I mean he can approve it, he can reject it, or perhaps it's something that he would like his manager to review. He can actually reassign the posting review to somebody else from right here. Once all the reviews have been completed, the review coordinator is notified, and they generate an action listing. They filter it by rejected postings, and then this report is used to action the results of the review. In the second example, the Global User Security Access Review, again, this is an IT-dependent review. It was manual. It's in support of our compliance requirements, being that periodic user security access needs to be reviewed. In this case, it's annually. It was a manual process again that was executed in worksheets. With this particular control, it was really cumbersome, not that difficult, but cumbersome to actually gather the data and prepare the data. The review coordinator had to go to SAP, execute swim reports, and then export those to the Excel sheets, and then go back and figure out the mappings for the users that were contained in the data. Also, a unique issue that we dealt with in the manual execution of this control was that we weren't providing enough detail about the composite role that was assigned to users in this case. The result of that was that the review itself, it questioned some of the accuracy of the review, and I'll explain that a little bit more. This review generated a ton of evidentiary data reports that needed to be assembled, consolidated, and logged onto a team site where the auditors would have to go and dig through the data when they came in to audit the control. And again, managing it from beginning to end was very inefficient and time-consuming. Now, this is what the review looked like prior to onboarding it to the workflow utility. The reviewer was sent a spreadsheet that simply contained his direct report and an SAP role with technical role name and the role description. Now, with regard to accuracy, the reviewer, if he really understood what was in the role, he had enough information at this level to make a decision whether to approve or reject from a user. If he didn't have enough information about the role, standard operating procedure would be to go to security, reach out to the security team, and ask them what simple roles or what authorizations are contained within this role before he could make his decision. So as you can see, that just prolongs the time that it takes for the reviewer to complete the review, and it's more time-consuming. On the other hand, if a reviewer didn't really understand what the role was, he could err on the side of caution and reject the role. And the risk there is that he's rejecting it from a user that really requires that access to do his job, and ultimately we'd end up having to reinstate the access. On the other hand, the reviewer could look at the role, say, well, I know John is in production. I believe he's a production lead, and I'm going to approve the role because it looks right. And obviously the risk there, if he didn't completely understand what the role provided in terms of access, he's at risk for leaving inappropriate access with this user for something that he didn't need. And that's where the accuracy of the review can be compromised. So what did onboarding this control do for us? Well, first and foremost, it eliminated the use of spreadsheets. Also, if you recall the graphic of the four-step process to manually execute this control, the steps 1 and 2, gather and prepare the data for this particular control, was completely eliminated because the review coordinator could push the import button and the user and role assignments were automatically imported into the tool, and the mapping for the reviewers was conducted. We also are able to provide a lot more detail about the role to the reviewer, the decision-making detail that he needs to make an accurate decision as to what to do. The documentation, as I mentioned, for this particular review, there's a lot of documentation that's generated. At a minimum, automating this workflow, it streamlined the generation of this information by the coordinator. However, you do have the option to allow the auditors to go ahead and generate this information on demand, which greatly reduced the time and effort by the coordinator if they opt to do this. And finally, again, we provided the tools within the utility to effectively manage this process from beginning to end that included, again, automatic notification for pending reviews, late reviews, things of that nature. It also provides multiple forms of status and review results reporting. So what does it look like? In this review, for this control, the user again is notified email automatically that he has reviews pending. He's provided a link. When they click on the link, they're presented, they go to their review homepage and they're presented with their employees. When they click on the employee, it tells them what composite role is assigned. If this is enough information, the reviewer can take action right here, approve, reject, or perhaps reassign. If they want to look at more detail, they click on the role and they're provided with details about that role that make up the access that's provided. And from here, now he's been presented with all the information that's available to that role, and he can make a decision. When all the reviews have been conducted, the review coordinator again prints out an action list, filters on rejected users or roles. They export that list to Excel automatically, and they open a ticket to the security team, attach the action list, and request deprovisioning or role removal. When security completes that process, they notify the coordinator, and the review coordinator can then refresh the data and generate a report for comparison. So an auditor at this point, whether he generates these reports himself or is provided with these reports, everything is in a standard format, and he's got the ability to review a before view of the review and an after view, ensuring that the actions taken, the rejections, are no longer on the system. So in summary, what did we do? For Park and Post, we obviously streamlined the process, and we made it easier for them to conduct the first two steps of the process, which is gather and prepare the data. The reviewer's overall time and effort to complete was decreased. We provided auditable artifacts for the auditors, and we provided an automated solution to manage the execution of that control from beginning to end. In the case of the Global User Security Access Review, we streamlined the process. In fact, we not only streamlined it, but we completely eliminated steps 1 and 2 in the manual process for gathering and preparing the data. We also decrease the overall time and effort required by the coordinator by up to 50% because of eliminating these two steps. Streamline the end user deprovisioning process with security. We provided the automated tools to manage the effort end to end. We provided a streamlined audit process, so now all the data is in one location and they could self-serve if they wanted to. And more importantly, by providing the additional decision data, we've improved the overall review of, or accuracy of the review. So in closing, I hope that this gives you a good idea of the benefits that can be obtained through automating some of the, or well, streamlining some of these processes. With that, I'm going to hand it back to Dan.
Thanks very much, Dennis, for very insightful and practical examples there of putting automation to make manual and IT-dependent control testing a bit more easier. So, in line with the survey, Dennis's experience has also showed there's a lot of manual control testing out there, or manual testing of IT-dependent controls, and he's been there with his capabilities to provide streamlining and efficiency to people who are traditionally doing this manually. So that's kind of a good insight. I would just remind you, we've got some questions coming through. Do add any more questions into the question panel as we go. So we'll do our best to answer them either live or by email. So, from both the survey results, the conversations we've had with the participants, and from the work that Dennis has been doing, it's pretty clear there is an elephant in the room. It may be a known elephant. We may all know that the majority of our controls are not only not automated, but not automatable. But it does give us the opportunity to think about things in a slightly different way and work out what we should do about it. Certainly the evidence is today that 25% coverage of automated controls is best in class. You know, that may improve, but the evidence is that's never going to get to anywhere near a majority. So the question is, can we optimize the 75%? We're busy optimizing the 25% already. What can we do about the 75%, and is it cost effective? So that's kind of an interesting question for us all. Now, coming back to the opening remarks, we have an opportunity right now because it's timely that COSO 2013 revision is out there. We're being challenged and encouraged to implement it this year. So in your businesses, you will already be looking at your internal control frameworks, controls over financial reporting. So you'll be asking questions already about how to optimize. So this is an opportunity to ask an additional set of questions to help streamline your own processes. So in terms of the COSO framework, the key ones which are in focus under 2013 are the control activities, information and communication, and monitoring activities. So you see in Dennis's case, number 12, he's looked at deploying through better procedures, in his case with some streamlining automation, better communication internally, and better separate evaluation and attestation. So this COSO 2013 review that's going on right now, I'm sure in your own organizations, you have the new framework, how do we optimize against that? You can add in this whole question about how do we deal with the 75%. So there's lots of questions about controls rationalization. What controls do we really require? What are the best form of controls? Are all the relevant risks covered? What's the cost of control we find acceptable in our business? In automation, how much did we automate? How much should we automate? Not the balance. How much can we optimize? And then that again brings us into controls attestation. How do we perform it today? What's the total cost of that? And where and how can we optimize? So let's bring this down to what we've learned. The majority of controls cannot be automated, despite received wisdom perhaps, but that's pretty clear. We do need a balance of automated, hybrid, and manual controls. We just need to get the right balance for our business. We need a balance of preventive and detective controls. We do need management oversight and attestation, and as Dennis has very clearly illustrated, we can optimize the Excel and email processes which blight a lot of these manual and IT-dependent controls. So some suggestions for you. I would encourage you to do a situation analysis in your own organization. If you haven't taken a survey, please respond to the follow-up email and we'll give you access at least to the survey questions so you can benchmark yourself against the results. And obviously if you take a survey you can participate. The main survey is closed now, but I'm sure we'll be able to give you access to those questions. Do encourage you to join the conversation. This is not a simple yes or no discussion. It does stimulate a lot of thought. And so there is a conversation on LinkedIn, a discussion which you can participate in to share experiences and best practices, and perhaps we can all learn about ideas that we can do to improve this. Do review your plan for COSO 2013 implementation, as I've suggested. Assess the low-hanging fruit in the 75%. Review your current approach. Work out where you can improve and optimize. Assess your available tools. And with the right stakeholder alignment, I suggest you want to prove the concept and effort savings, as Dennis has done, in some percentage of the low-hanging fruit as a way of streamlining your processes. So what we've covered today, we've talked about risk control automation, some of the received wisdom, some of the observations, perhaps some of the ways we've been thinking, which perhaps don't relate to reality when we do the survey. The survey itself, the results and conclusions. We've heard Dennis's case study examples, which are very enlightening. We've talked about suggestions and these hits and myths. Now we do have a couple of minutes for Q&A. You've asked some good questions in the interface. What I would say in closing the primary part of the webcast is, from what we've seen here, I suggest our challenge here is to work out how to adjust our sails to make our internal control framework more effective. The fact is, we can complain that all controls can't be automated. It's a fact. Never going to change. And we might hope things are going to change around us, but our job is to make a difference here. So in terms of questions, I'm just going to we have time for a couple of quick questions. We'll do the rest by email. If you've got any specific questions, you can email me. You will get follow-up to this anyway. There's some other areas that you might be interested in terms of thoughts around this stuff. And join the conversation on LinkedIn. There is a risk control and performance monitoring forum, which you will get the detail link to if you would like to participate in that discussion. So in terms of questions, we have a couple of questions here. I think we've got time for one or two. So Dennis, I guess this one's for you. Where did you perceive the biggest benefit of this workflow approach before you did it, and how did that compare to the results after you did it? But basically, I think the question is, the benefits you got the ones you expected, or did you get anything different?
Well, yes, they were primarily what we expected, excuse me, and that was to streamline and optimize the execution of the control, and that they were manual, they were costly, and very time-consuming. We also realized, excuse me, that one of the byproducts of this process was we were able to provide auditable documentation, artifacts and streamline the audit process as well.
Okay, thank you very much, Dennis. I'm aware that our 40 minutes is up, and I'm already aware that we've taken 10 minutes more than we advertised, so we will deal with the rest of the questions by email. Thank you very much for your attendance. I hope you found it useful. Thank you from Chicago. Thank you from me.
Thank you from me.
And thank you. Well, enjoy the rest of your day.